In this episode, Africa's data center market is projected to grow from $3.5 billion today to a whopping $7 billion by the year 2030. So by the year 2030, data center market across Africa is going to explode by 100% growth rate. That is insane. Now, if you are not into technology or IT and related industry, this would still impact you. And here is the reason why. So it's projected that data centers, or the growth in data centers, is becoming the single most important catalyst that is transforming the chronic underinvestment in the area of our power or electricity sector across the continent. Just data center alone is bringing huge investments and transformation in the power generation sector. So regardless of which industry you are or which area that excites you, and you are in Africa or you do business in Africa, this episode is going to be of interest or importance to you, right? So what's going to happen is that in this episode, I'm just going to do a deep dive to unpack or do a breakdown of how data center demand is creating bankable electricity demand that is finally unlocking big time patient capital for Africa's energy transformation, and why the next 24 months are going to be very crucial for investors, multinational corporations, development finance institutions who choose to position themselves for this amazing convergence. Let's dive deep. So as I said, Africa's data center market is projected to grow from here, that's 3.5 billion US dollars, all the way to 7 billion US dollars right here. So that's what this infographic is saying. And according to the data available today, data centers have emerged basically as the single most powerful catalyst, right, for transforming Africa's chronically underinvested power sector. And this should be good news for everybody. So basically what's been happening is that data centers require massive amount of energy, right? So we're moving from $3.5 billion today to nearly $7 billion in 2030. What is going to happen is that as we are creating those data centers requires electricity to run effectively. And so basically, problem or one infrastructure challenge, which is data center, is having a knock-on effect on electricity production as well. So as we begin to fix the infrastructure that has to do with data center, we are inadvertently also fixing the issue that has to do with chronic underinvestment in the power sector. So what's going to happen is that, so basically this causing a convergence. And what that convergence means is that these two infrastructure challenges are merging into one mega opportunity. And what is it? So dual infrastructure investment that is simultaneously funding for digital and power grid. So you're not going to be able to, or investors are not going to just fund data centers. If you're going to fund data centers, you also have to fund power generation. And when that happens, something beautiful happens, because it's not your traditional kind of fossil fuel driven power generation that these days data center providers require. They require renewable energy. So as more money is being poured into data centers, more money is also being poured into renewable energy in terms of electricity production. And that has a knock-on effect on economic transformation as well. Okay, so this is where we are. Let's look at the challenges that are hitting Africa today. So in today's terms, nearly 600 million Africans do not have access to electricity. Let that sink in. That is a whopping 40%. So 600 million Africans do not have access to electricity at all. For those who do have access to electricity, This is what is happening. They are also having issues, or a large percentage also have issues regards to frequent outages and rolling blackouts. It's everywhere. Some countries more so than others. Let me put that in perspective. For some countries, the power outages are not that severe. For others, it's seriously chronic. So for these, it impacts business operations. Even though they have electricity, but to what extent? And if the electricity is not reliable, then what happens is that it has a knock-on effect on business disruption, that's here, and then economic impact. I want to share something very valuable with you, and that is, if you are finding this Africa Business Intelligence useful, you need to know about our newsletter that goes even deeper. We publish 2 specialized newsletters each week that delivers the market intelligence you can't find anywhere else. On Tuesdays, we send out AI Africa Weekly, your source for African AI investment and innovation intelligence. This covers everything from fintech funding rounds to AI implementations across the continent, plus global AI developments that impact African markets. Then on Thursdays, you will get our markets and investments newsletter, which is focused on infrastructure development, traditional sector investments, and business opportunities across African markets. So think infrastructure projects, private equity deals, and policy changes that create real business opportunities. Both newsletters are completely free, and they are read by investors, corporate executives, and business leaders across Africa and internationally. You can sign up for both newsletters by using the link in the description below, right below. So the overall impact is that these energy deficits severely limit economic progress, innovation, and quality of life across the continent, right? So for decades, Africa's power sector has struggled to attract long-term capital that it desperately needs. And this is the result of government debt burdens that limit public investments. Also, another factor is investors typically are deterred or not encouraged by currency risks or currency fluctuations, and most importantly, sometimes regulatory uncertainty. Regulatory uncertainty is a big red flag, or has been a big red flag for most would-be investors. And then also questions about ROI, or their return on investment. So all these things have been part of the reasons why Africa has struggled, particularly in the area of power generation. And the resulting effect is that this creates a vicious cycle where unreliable power deters industrial investment or industrial manufacturing. You can't do that without reliable power supply. And when that happens, this limits productivity. And then, in part, or the knock-on effect is that it constrains the ability to generate the much needed revenue that needs to be invested back into infrastructure. So it's like a double whammy effect. Okay. So let's look at this. So for instance, as an example, Nigeria exemplifies this crisis in a classic way, right? In very, very stark terms. So let's look at it here. Nigeria hosts 17 data centers. 17 data centers as of now, right? So that represents one third of all data center concentration on the continent of Africa. Let that sink in. Yet, Nigeria's national grid, that's the electricity grid, delivers only 4 hours of power supply. That's the most 4 hours of reliable power supply per day. So just think of it. We have 24 hours in a day, but their national grid can only support 4 hours of daily grid supply. So this forces data center operators to maintain diesel generators that's able to power these data centers 100% of the time. And what happens is that drives up their costs. So here, because you are using diesel power generators to really run the data centers, all the time, guess what? Operating costs shoot up. Okay, operating costs shoot up. Then the other knock-on effect is the impact on the environment, environmental pollution because of the emissions from these diesel power generators. So the emergence of data centers as a major electricity consumer or consumers is fundamentally changing this equation. So unlike, let's say, domestic or even industrial customers whose operations, whose demand for electricity fluctuates, right? Particularly like domestic consumers. In the daytime, they are at work. When they close and come back to work, then electricity demand just peaks. So the demand for power fluctuates throughout the day and even throughout the weeks and months. So the demand fluctuates. The same for industrial customers who run, let's say shifts. Maybe they work 8-hour shifts. After the 8 hour, the plant shuts down. So at that point, after the plant shuts down, demand for electricity dips for the day. So it's very unpredictable. Compare that with data center. For data centers, the equation is completely different. Why? Because these data centers require consistent electricity consumption throughout the day, 24/7, 365 days a week. There's never a lull day. They don't have fluctuating consumption. Their consumption is purely stable, and they require large volume of reliable, uninterrupted electricity 24 hours a day, 365 days a week. And what does this do? This creates what I call bankable demand. Bankable demand in terms of demand that is sufficiently predictable and long term. This is money. Because what happens is that these data centers, because they require heavy electricity consumption that is stable, that is 24/7 round the clock throughout the year. If a power supply company were to do business with them, what's going to happen is that they're going to be able to write long-term contracts. So let's say like 15, 20-year contract for a data center to run at 100 megawatts. That is bankable. That power producer can take that to funding institutions to get funding for that, because this is what financial experts call a bankable investment opportunity. So for instance, Microsoft and G40 company committed $1 billion to build 100 megawatt geothermal power center in Kenya. They call it the Olkaria region. And they are not just building this facility, they are creating the foundation for financing new power generation that benefits the entire Kenyan community. So what happens is that when these data centers begin to cluster in countries, because of their massive demand for power, what happens is that because of that, investment comes into the investment flow into the power sector also increases. And that has a knock-on effect of causing that infrastructure build to be available to the larger masses or to businesses, to household, and etc. So places where they've had chronic power shortage or power issues begin to benefit. It becomes like a wave. When you go the seashore and you see the wave lifting things, even the wave can lift anything, lifting boats and ships and everything. The wave carry. So basically, the larger economy or the larger society can ride this wave of heavy electricity usage that is being propagated by data centers. Okay. So how do you actually capitalize on this convergence or this opportunity if you are an investor or a private equity firm or any such institution? There are a couple of ways to capitalize on that. So the first is that private equity is going to be the most obvious path, right? So what this is that it creates, what this opportunities that is creating bankable demand. As I already said, everybody wants predictable long-term customer. And that predictable long-term customer is the data center operator. They can write a contract for 20 years for predictable long-term electricity supply. Right? So the case as I was talking about was the Kenya's Olarius region geothermal data center. Right? That's data center powered by geothermal electricity. That is made available to the general masses. So that is what we're talking about. Then it has a broader impact on the economy where there's confident investment and new capacity is built because of this data center. So for private equity firms, that your path is direct investment in data sector operators that are expanding across secondary markets. There's a company called Raxio Group, Raxio Group, and they are backed by $100 million investment from IFC, that is International Finance Corporation, and it's expanding rapidly on the continent, building tier 3 facilities. Tier 3 is a type of data center facility. So they're building those kind of facilities across couple of sub-Saharan African countries, including Ethiopia, I think Mozambique, DRC, Cote d'Ivoire, Cote d'Ivoire, Tanzania, and Angola. And I think there are more in the pipeline. So the data sector growth is amazing. It's just off the charts right now, going forward. But the more sophisticated opportunity, yes, the data center infrastructure is being built. But to me, the more sophisticated opportunities lies in the power infrastructure that serves these anchor data center customers. So think of people or institutions that are in the area of solar farms or renewable energy production. So private equity firms can invest in that. They can invest in data centers, or they can also invest in solar farms with battery storage. Companies that are into that, and are doing business in Africa, they can really plug into that. Then also companies that are doing geothermal projects and wind farms that are paired with long-term power purchase agreements with data centers. These offer very stable returns and strategic positioning, as you would say. So, but there was a research that was done by McKinsey, and McKinsey it showed that the power cost for the power cost or the consumption of electricity for a data center in terms of its cost represents anywhere between 5 to 15% of the total cost of operating hyperscale data center. That is big, giant data centers. So the cost of power is anywhere between 5 to 15% of their entire operation cost. What does that mean? That means that they will pay you premium rates for reliability and sustainability. If you can prove that you are reliable and your power source is sustainable, you don't have a problem with it in terms of cash flow coming from your clients or these data center clients. So there's the requirements, there's resource requirements for building data centers vary significantly by the approach that is used. So direct data center investments typically requires anywhere between 50 to 200 million US dollars for meaningful regional platforms, right? And then for the power infrastructure, there are projects that are smaller projects, and then there are medium and there are huge projects. So for like power infrastructure projects, 7 like data centers range from say 10 to 50 million US dollars. But for distributed solar power storage, you are looking at anywhere between 100 to 500 million for utility scale renewable developments. These are long-term investments that are guaranteed to pay for themselves because of these anchor clients, which are the data centers. So the key here is understanding that these investments are complementary. So investing in data center may necessitate you also investing in power supply as well, and making the power supply not just available to the data centers by finding a way by which it can also feed back into the national grid. So now let's look at the immediate next steps, and it follows this 3-phased approach. So let's look at the first phase. The first phase would comprise of market assessment and positioning. This is for like the first 30 to 90 days, what as a potential investor you would need to do. All right. So in this phase, we are looking at your immediate priority is going to be in market intelligence and relationship building. So the first thing is to identify which Africa's data center markets align with your investment objective or investment criteria, and also your risk tolerance. Investor organization has their own level of appetite or alignment when it comes to which country they would want to operate in. So to even help you do that, you could use our africainsights.ai platform to be able to do that. So basically, it's a platform that provides comprehensive analysis across all 54 African countries. So you could look at that and look at things like the business factors analysis, investment climate analysis, regulatory compliance analysis, or you can run a full market entry assessment focusing on the power generation or energy sector, and you have a lot of insight. So that is one of it. So just to put it in context though, so countries like South Africa offers mature or fast returning opportunities with over 83% facility utilization, lower growth rates. So South Africa is matured that you can plug in, but it offers a lower growth rate if you're looking at like data centers and stuff. So compare that with markets like Kenya, that presents like a 30% compound annual growth rate through 2028. So these are things that you could use the Africa Insights.ai platform to be able to sift through which countries could give you the best return on your investment. Right? So Nigeria also presents the largest untapped opportunity, but requires sophisticated power risk management because, as we said, they have issue with power generation. Okay. Then the next phase is strategic investment and capacity building. You're looking at anywhere between the time frame of between 3 to 6 months. So this is where you make your primary capital allocation decisions for data center investment. For data center investment, what you're going to be looking at is going to be places or countries where utilization rates exceed 70% and regulatory frameworks are stable. So that would be a good place to be. Regulatory frameworks are stable or stabilizing, and utilization rates are 70% more. And for power infrastructure, you would want to prioritize projects with confirmed data center anchor customers, because that's why you are doing it anyway. So make sure the markets you are entering in, you have confirmed data center customers. That would buy into long-term contracts or long-term purchase agreements. Okay. So that's for the strategic investment and capacity build. That's phase 2. And then finally, when you look at phase 3, you're going to be looking at long-term competitive positioning. This is anywhere between a space of 1 to 3 years. So what's going to happen is that you're going to, once phase 1 and phase 2 have worked very well, or you've checked those boxes, you're now going to be able to scale your successful models across multiple markets. So if you're looking at East Africa, you're going to look at potentially scaling your model across, let's say, Kenya, Tanzania, Uganda, and the rest, right? So that is where we're going to be. Then the data center operators who establish strong positions in 3 to 5 African markets will actually capture disproportionate share of regional growth. So you're looking at that point, at phase 3, you're looking at really pushing the boundaries when it comes to regional integration or regional efforts. And that positions you at a very, very high competitive advantage. And for power investors, who you're going to look at demonstrating successful project delivery. If you demonstrate successful project delivery by maintaining consistent power supply to these data center players, you're going to gain larger access to bigger and more profitable markets. It's that simple. They are looking for reliable power supply. So that is it for next step. So let's look at what are the market dynamics and regional impact. So I would say your competitive landscape is consolidating rapidly, particularly with these global hyperscalers like AWS, that's Amazon Web Services, and Microsoft and Google. These global hyperscalers are committing billions of dollars into their presence on the continent of Africa. For instance, AWS has invested close to $1 billion in South Africa since 2018. And they have plans for an additional $1.9 billion by the year 2029. Let that sink in. Microsoft alone is spending $350 million by 2027 to expand cloud and AI infrastructure across the region. So this means that these hyperscaler investments are creating powerful network effects, because what we are seeing is that once these global hyperscalers are established, once they get established, they attract related service providers. It becomes an ecosystem or a magnet. An ecosystem gets built around it, including other service providers, software companies, fintech companies, digital agencies, and the likes, right? So it creates a whole ecosystem around them in the countries that these data centers, or in the regions or the local areas that these data centers are located. Right? And particularly useful to banks, big insurance companies, telecom companies, and the rest. So South Africa and Kenya are already experiencing this kind of clustering effect or consolidating effect, where data center hubs become magnets for broader technology investments. Now let's look at next steps and the call to action. It's very simple. This convergence of Africa's data center boom and power sector transformation represents a once in a decade infrastructure opportunity. It could actually represent even a once in a lifetime opportunity, because of how AI is just exploding, and the demands for more data centers and its corresponding power supply. What that represents. So when you look at it, the total addressable market, or the TAM as it's normally called, for power sector investment catalyzed by data center development could exceed anywhere between $15 to $25 billion over the next 5 to 7 years. That is significant. So basically what we are talking about is that capital that would not have flown into Africa's power infrastructure is flowing in, or is about to flow in. Why? Because of anchor demand created by what? Data centers. Because of anchor demand that's created by data centers. So the evidence is pretty compelling, in the sense that global hyperscalers are committing substantial capital, and regional operators too are expanding aggressively. And vis-a-vis development finance institutions are also committing patient capital. And countries are implementing supporting regulatory frameworks or favorable regulatory compliance frameworks that helps these kinds of investments to become more sustainable and stable. So this convergence creates a massive window of opportunity that is happening now and will remain open roughly between the next 24 to 36 months. So if this is your cup of tea, I think you need to look very closely on the African continental market when it comes to data center and its corresponding power supply services. Awesome. So if you found this episode useful or valuable, I would want to remind you to subscribe to our weekly African Market Insights newsletter. That goes out every Tuesday and every Thursday. Tuesday is AI focus. Thursday is markets, investments, and investment opportunities focus. Awesome. I look forward to seeing you in my next video. Thanks.